They are well prepared with their products and have devised a strategy to conquer the European market. BYD, the Chinese EV giant, has been immensely successful in Asia, becoming the second EV manufacturer to profit from EV sales. Remarkably, they have even surpassed Tesla in sales volume in China. However, BYD is encountering a major setback in Europe, presenting a colossal challenge for the company. Join us as we delve into BYD's significant European problem and its potential to disrupt the company's global aspirations. Chinese EV brands like NIO and BYD have gained popularity and a strong foothold in the Chinese market with their stylish and technologically advanced EV offerings. Speculation suggests that these brands could eventually rival and even surpass Tesla's dominance in the EV market. Yet, in order to achieve global success, they must expand their sales to Europe. In the past year, both BYD and NIO made substantial efforts to enter the European market by introducing their all-electric models through virtual events. However, the reception of these Chinese brands in Europe has been disappointing. Despite initial excitement surrounding their entry, sales have fallen far short of expectations. It is important to note that Europeans have a strong affinity for EVs, and overall sales volumes are soaring. However, they are hesitant to purchase Chinese EVs. This trend is evident in the increasing market share of alternative propulsion vehicles, APVs, which encompass EVs and other vehicles that do not rely solely on traditional fossil fuels derived from petroleum. During the final quarter of 2022, APVs accounted for more than half of the European Union's car market, securing a significant 53.1% share. This equates to over 1.3 million non-internal combustion engines registered during that period, signifying a noteworthy milestone for the industry. APVs encompass various types of vehicles, including fully electric cars, plug-in hybrids, and hybrid vehicles. These vehicles either run solely on renewable energy sources like electric batteries or utilize a hybrid system that combines a fossil fuel engine with a renewable energy source. This development is particularly notable as it marked the first instance of APV sales surpassing those of petrol and diesel vehicles in a quarterly time frame. This shift indicates a growing consumer preference for cleaner and more sustainable modes of transportation. When it comes to sheer purchasing power, China's dominance in the electric vehicle market remains unrivaled. The country accounted for half of all EVs sold in 2021 and will continue to be the leading nation for EV sales for decades to come. However, when considering other vital metrics in the EV market, such as the share of total car sales, the share of existing car inventories, and sales per million people, Europe has made significant progress and established a notable lead. In Nordic countries like Sweden and Norway, EV sales have achieved impressive levels in 2022, comprising over 50% of total vehicle sales. Similarly, the UK saw 1 out of every 4 cars sold being an EV. Despite these remarkable statistics, BYD's performance in the European market has been unexpectedly weak. Upon the introduction of the ATO3 in the UK, BYD managed to sell only 34 units in the first month. Contrary to expectations, sales did not improve in the subsequent months, with 29 units sold in the second month and 21 units in the third. This pattern is not unique to the UK, but rather reflects a similar trend in other European countries where the ATO3 has been launched. The low sales figures indicate that the ATO3 has encountered difficulties in gaining traction and generating widespread consumer interest in these markets. However, it is worth mentioning that the ATO3 has performed relatively better in the Netherlands compared to other European countries, although even there, sales have been limited to 573 vehicles over the past 7 months. Sweden and Norway present an interesting scenario. In December 2022, the BYD ATO3 achieved notable sales in these countries, with 980 units sold in Sweden and 593 units sold in Norway. This initial success may have fostered optimism regarding the model's performance. However, sales of the ATO3 in both Sweden and Norway have since experienced a significant decline. Following strong December sales, ATO3 units sold in Sweden dropped to single digits, with only 9 units sold in January. Although there was a slight increase to 110 units in February, it was followed by a decline to 50 units in March and 60 units in the subsequent month. Similarly, in Norway, ATO3 sales exhibited a downward trajectory. After December's 593 units sold, January witnessed a steep drop to 8 units. Although sales modestly increased to 54 units in February, they declined to 28 units in March and 18 units in the following month. The most recent reported sales figure stands at 21 units. So, why is this happening exactly? It is difficult to say whether Europeans have a bias against Chinese brands. However, one major contributing factor to the ATO3's sales challenges is its pricing. Positioned at £38,000 in the UK, the ATO3 falls within a price range similar to the Tesla Model Y. Considering Tesla's well-established brand reputation, popularity, and the larger size of the Model Y, it is understandable that consumers lean towards the more recognized and sought-after option. BYD, being a relatively unfamiliar brand in Europe compared to Tesla, faces an uphill battle in convincing consumers to choose their product at a similar price point. Automakers must carefully consider market dynamics and consumer preferences when setting prices. While the ATO, the 3rd of May, offer advantages and unique features, its pricing strategy should align with market expectations and the brand's positioning. Adjusting the pricing of the BYD ATO3 could be a crucial step towards improving its sales performance in the European market, as demonstrated by its better sales in countries like Thailand and Australia, where it is priced more reasonably. In Australia, the ATO3 is priced approximately 18,000 AUD lower than the Tesla Model Y, giving it a competitive edge in terms of affordability. This pricing advantage has contributed to its relatively stronger sales performance in the Australian market. Another factor that can influence consumer perception is the infotainment system. Chinese vehicles, including those from BYD, have faced criticism for their infotainment systems, which may not offer the same level of sophistication, user-friendliness, or integration as those provided by more established brands. Recognizing this, the CEO of BYD has acknowledged the need to improve the infotainment systems in their vehicles. Enhancements in this area can contribute to a more positive ownership experience and help address consumer concerns. It's not all negative for BYD, as it has found success in other markets, such as Israel, Australia, and Thailand. However, these markets are relatively smaller compared to the major markets of Europe and the United States. Europe and the United States are critical battlegrounds for electric vehicle manufacturers due to their market size, purchasing power, and influence on global automotive trends. Gaining a significant market share in these regions is crucial for automakers seeking to establish themselves as key players in the global electric vehicle market. However, BYD faces challenges when it comes to entering the United States market, which has its own regulations, safety standards, and market dynamics that can pose barriers for foreign automakers. Successfully entering the U.S. market requires substantial investments, regulatory compliance, the establishment of a sales and service network, and building brand recognition. Given these challenges, Europe becomes even more important for BYD's expansion and success. Europe has been actively promoting electric vehicles through supportive policies, incentives, and the expansion of charging infrastructure. The European market provides a significant opportunity for BYD to establish a strong presence and compete with other well-established automakers in the electric vehicle industry. What are your thoughts on this? Feel free to share your comments below.